Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for making time on this Friday.
Good afternoon.
Well, U.S. stocks have just closed out their worst first half of the year since 1970, lower again on Thursday. This past quarter looks like the Dow off by 11%, S&P 16%, and the Nasdaq 22%. What's happening in this market, and what's it look like for the second half?
Yes, on Thursday, Wall Street closed at negative territories where the S&P was down by 0.9% and Nasdaq underperforming, falling by 1.3%. This is continued concern has affected the market over the worsening growth outlook and also persistently high level of inflation that's coming through. And people are concerned that the looming threat of a longer than expected tightening cycle from the Fed because of the higher inflation numbers. On the data point, if you look at the core PCE price index inflation, Fed preferred index inflation gauge showed somewhat of a relief that it is easing to a 6-month low of 4.7% in May 2022. We think that that number will continue to fall, but I think that people are concerned that the overall consumption growth rates were falling to the level of 2% to 3% level, while the inflation numbers is such a high level of still 4.7%. So I guess the continuation of concern about whether the Fed might slow down in terms of the rate hike because of the high inflation, despite the uncertainty of the economic growth rate slowing down. But despite all that, if you look at the Chinese market, we are seeing quite a bit of a rising trend continuously happening. We did see that it rose by 19% from its bottom since the end of April. So it seems that there's been a clear different signals from China versus U.S., where Chinese economy seems to be recovering, while the U.S. is still suffering from the slowing down of the economic growth rate.
Well, Korean stocks started out higher today, but that was quickly gone. Another significant decline for both main indices. Companies been especially volatile this week include Samsung SDI and LG Energy Solution, down again, and the exchange rate holding up there at about 1,300. Tell us about the domestic market.
Yes, if you look at the Kospi, it's down by 1.17%. Kosdaq is down by 2.14%. Foreigners are continuing to be net seller by about 344 billion of Kospi and 100 billion won of Kosdaq. However, though, they are net purchaser of the futures market as well as the call option, while they're selling the put options. So clearly, I don't think that the foreigners are in any play for directions or delta plays, but rather they're focusing on the specific stocks. What we're seeing of the selling pressure today is because of the semiconductor businesses, particularly DRAM businesses. We did have results coming out from Micron last night, and the guidance is quite poor, and therefore people are worried about the order cuts on the DRAM side, and obviously Korea's Samsung Electronics and SK Hynix were heavily affected, and the prices were down most significantly. But other than that, we think that the overall foreign investors trend seems to be stabilizing, while the currency also seems to be stabilizing as well. So we think that it's not necessarily a directional place, but more of a stock picking place for the current point in time for Kospi Index.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for coming on. We really appreciate it, and have a great weekend.
Thank you. You too.